I'm Joshua Freedman, Senior Analyst at Rapaport, and welcome to this special video edition of the Rapaport Diamond Podcast. My guest on this episode was Roy Safit, recently appointed CEO of the Fancy Colour Research Foundation, the FCRF. We spoke about the work of the FCRF, how its price index works, and how the global downturn and sanctions on Russian goods have affected prices of yellows, blues, and pink diamonds in different ways. Enjoy the episode.
Now there's a better way to buy and sell gemstones. You can find rubies, emeralds, sapphires, and any other colored stone you need in seconds on the world's largest and most trusted trading platform for diamonds, gems, and jewelry. Browse RapNet's vast inventory to find loose gemstones from thousands of verified and trusted suppliers worldwide at the best price. Powered by Rapaport, the diamond industry's leading authority for over 50 years, RapNet will give you the confidence to buy and sell gemstones 24/7, easily and safely. Join RapNet today.
Roy, welcome to the podcast. Great to have you here. I'm going to ask a little bit later about what the FCRF is and your views on the fancy coloured diamond market. But to begin with, maybe we could have an introduction to you. How did you get into the diamond industry?
So first off, thank you for having me. Back in 2015, I was approached by Hennig to become a global business development director for the company. And that's how I actually started. I was with Hennig for 3.5 years, in which I worked on many different opportunities. I've been involved in various sectors and segments of the industry, from mining all the way through the retail end, and I accumulated quite a bit of knowledge in the process.
You're actually our second Hennig alumnus in quick succession on this podcast. We had A.L. Axelrod a few weeks ago.
Right.
What have you learned about the diamond industry in your various roles?
So the diamond industry it's probably accurate to say that it's very unique. If you look at the history of the diamond industry and if you look at the life cycle of the industry, it's probably nothing like anything else. For many years, it was a very closed community of players, and it slowly opened up, especially with the opening up of De Beers. If you take a look at the life cycle, something that I found was the epitome of the diamond industry, that a shakeout phase in the diamond industry happened very late in the game. And that's something that doesn't happen in many industries. And I think that that's one of the things that make it unique. Also, the different gravitational pull that exists from very specific players in this market created a unique type of surrounding, unique dynamics that have impacted this market and made it something that is like nothing else that I've seen, at least before.
And you've also had quite a few roles in other industries. Can you tell me a little bit about that and what have you learned in other industries that you've been able to apply in diamonds?
So I'm originally from the technology space. The technology space has been the world that I've been operating in many different roles, most of them around being an entrepreneur, building companies from scratch, sometimes from an early stage. Also assumed the role of an executive in very large publicly traded companies. Always around data systems. So data systems is an area that I know very well. I've participated in a number of capacities and in a number of very large industries, such as telecommunication, the finance industry, the utilities business, and so on and so forth. One of the things that I've learned in other industries is that there is always room for improvement. There is always room to do things better, to do things differently. And it is actually that mindset that creates new things in any given industry. Disruption to some degree is a good thing, because from disruption, you see new things coming out, whether it's new business models, new technologies that change the way things are done in any given industry, whether it allows new companies and new ideas to come to the fore. And from my early days in this industry, I think that that has been my focal point, to look for new opportunities, to look for new ideas that even for this highly traditional business can bring new things to the market.
What was your role at Everledger?
So Everledger was actually the first deal that I brought to the table at iHenig. Did my research, and I found Leanne and Everledger back in mid-2015. And through iHenig, we've cooperated on a number of fronts. And then in 2018, I moved to Everledger to have a more significant role in that business. And I was a VP of Business Development at Everledger, working on a number of aspects that sought to extend the business. And also at some point, I was also managing the India-based team for Everledger, which included both technology-focusing resources and teams, but also worked a lot in the India space, especially in Surat and in Mumbai, where the Bharat Diamond Bourse is.
Right. And how did you come to be the CEO of the FCRF, the Fancy Colour Research Foundation?
So the previous CEO of the FCRF at some point announced that she's moving on, and I was approached by one of the members of the advisory board of the FCRF, and we started a process, and there was a positive outcome that allowed me to assume the head position at the FCRF.
Right. So from our perspective as journalists, the main thing we know the FCRF for is the Fancy Colour Price Index. But I'm sure there's a lot more to it than that. What can you tell us about why the FCRF was founded in the first place?
So first off, the FCRF is a treasure trove for people who are serious about the fancy color diamonds. It offers a wealth of resources for all players, whether inside the diamond pipeline and also around it. And since the inception of the FCRF, it has been holistically focused on putting these resources at the hands of these players that, again, are either within the process of from mine to market bringing these exceptional goods, or companies that have some relevance around the pipeline of fancy color diamonds and provide services to it. So some examples for that could be banks, could be insurance companies, could be financial publications, and so on.
How was the FCRF founded?
So there's a group of people, a group of players within the fancy color diamonds that understood that these exceptional goods require to have a certain type of handling that is different than colorless goods. The reason for that is because GIA did a tremendous job in providing, and still does, by the way, in providing the gemological traits of colorless goods with the 4 C's and other attributes that allow to reflect value for these diamonds. However, in addition to that, for fancy colored diamonds, there are other traits and attributes that reflect value and in a much greater manner because of the difference in value between fancy colored diamonds and colorless diamonds. And those needed to be brought to the market in a very specific way and in a specific language that will allow either those who trade in these exceptional goods or companies who sell them to understand what they are and to reflect them. And I went around to basically say that there were a few significant players in the middle of the pipeline that understood this and decided to build an entity that is focused around bringing that information to the fore. So there was a group of players in mid-market fancy color diamonds that have decided to pool together some resources to build the FCRF. This was back in 2014, so the FCRF is already more than 10 years old. That said, to the point of the index that you've mentioned, the data for the FCRF Fancy Color Diamond Index has been accumulated, well, over 20 years ago, since 2005. And this group of people have founded the FCRF, provided them the means to start accumulating all the resources that are needed in order to bring this to market. And this is really where the FCRF started and the reason behind its inception.
Is it a profit-making organization?
So the FCRF is not profit-making. However, it's self-sustained. The FCRF sells memberships and subscriptions in order to utilize the wide array of resources that it puts out to the market. And we will probably go over the offering of the FCRF a bit later on. But from the proceeds that is acquired from selling these memberships, goods, and services, the FCRF has the resources to proliferate its services. All proceeds that are being acquired as a result are poured back into the FCRF in order to have a wider reach, in order to extend its resources to a broader market, and continue the vision that it has and the resources that it brings to market.
Right, and you have a board of people who advise and oversee the running of the FCRF. Is that correct?
So we have a board of people, some of which provide different types of services and support. Some are very much subject matter expertise oriented, because in the world of fancy colored goods, you really need to know about the subject matter. Others are more market oriented. And we also have some external organizations that help us with things like methodology that is being employed, for instance, for the index. We have people that help with the mathematical and statistical analyses that we employ for the purpose of putting out various types of services and resources that we do. So the FCRF is surrounded by quite a bit of people that help it in the process of bringing these resources to market.
To clarify one thing that certainly confused me when I started covering the diamond industry nine and a half years ago, not all colored diamonds are fancy colored diamonds, correct?
That's correct.
What's the difference?
So Fancy color diamonds essentially are diamonds that of specific color, and generally speaking, the three major colors that are being noted are yellow, pink, and blue. However, there is also an undertone. There are also modifiers that lend to an even more wholesome color within these exceptional stones. Purple, green, orange, to name a few. And everything really starts with a GIA, because on the GIA certificate, the GIA determines whether it is a fancy color or not. And as you're probably aware, in the colorless, even in the colorless stones, you have a range of D to Z colors. And as you approach the Z color, it is more of a brownish tint. Ultimately, like I said, it is the GIA that categorizes and determines the fancy color or the existence of fancy color. And it is actually the FCRF who starts from where the GIA left it and continues with other definitions that zoom in to different aspects within the fancy color realm.
Right. So fancy color essentially means that the color that's there is to the benefit of the stone, rather than it just being a low colorless color, so to speak.
So I think that that's an accurate statement. Generally speaking, fancy color stones receive their value from their visual aesthetics and the fact that they are unique in the sense that they project color that is exceptional even within the diamond space. And the more unique that color is in the stone, obviously the more valuable fancy color goods are. And actually, in the rarity report that the FCRF puts out, we apply statistical analysis that demonstrate to what degree a particular stone is unique and how often or how scarce it is with respect to how many of those actually appear in a given time frame in the market.
Right. So you've told me a little bit about how the FCRF sustains itself. What can you tell me about your general strategy, and what are your plans for the FCRF?
So the strategy of the FCRF is to continue and extend the $4.5 billion market of fancy colored diamonds. We are looking to being a conduit, an accelerator, if you will, and definitely assuming a major role in proliferating this segment and enhancing the selling of it throughout the world. This is the strategy of the company, and this is what we want to achieve. The way to achieve it is to continue and develop tools and resources that we can put in the hands of the players that participate in this market. Some of these players are, for instance, mining companies that want to understand better the market value of these goods as they put them out, even in rough form, to the market. Dealers and manufacturers, they want to do the same. They also want to reflect the rarity of these goods, to reflect a diary that covers the story of these goods from mine all the way to market, with a number of other aspects that are interesting to the end consumer of these goods at the retail end, and we empower them to do so. In addition to that, if you look at the retail end itself, when fancy color diamonds are sold, it is obvious that these are exceptional goods, and therefore they deserve to have more talking points, more information that reflect the value of these stones, because in some instances, a one-color, deflawless, colorless diamond compared to a 1-carat fancy, vivid blue diamond could have 1,000 times its value or 100 times its value. And therefore, we bring to market, even at the retail end, the information that allows to show and reflect this value. If we continue the process to other entities around the diamond market that still play to some degree in this market or with the underlying asset, you have auction houses that from time to time are putting up for sale fancy colored goods. We are today cooperating with these players in order to demonstrate better value of the fancy colored diamonds that they put up for sale. And there's still a lot that can be done there in order to project value. You have investment houses that we are in constant touch with that are dying to jump into this market in order to provide products around this asset class. This is especially true given the fact that there has been quite a bit of resilience demonstrated by this asset class over the years, and therefore there is an allure to potential investors to participate in it. This is where our fancy color diamond index come into play, and we have partners and customers that use the fancy color index to whether analyze the market or to cover it. In addition to that, there are also insurance companies that provide services to this domain. Many are the cases where insurance companies are required to properly analyze the goods for which they provide coverage, and in order to extend the service that they provide to their customers in a better way. We have resources to help them with that and to better provide the products and services that they need to provide to their customers.
So, well, you're essentially functioning as a consultancy service to these various types of organizations.
So, Joshua, I think this is a good time to kind of introduce our different lines of businesses. And you're right. We provide tools, we provide services, and we provide also point of sale elements. When it comes to the tools, there are the diary reports and the rarity reports that I've mentioned. There's also our fancy color index that I've mentioned before. And there's a true face-up tool. It's another tool that allows to demonstrate how the visuals of the stone is compared to the empirical size and traits of the stone itself, because sometimes a stone is cut in a way that it actually appears much larger than its carat weight. This is particularly so in the fancy color diamond segment because visual is everything for fancy colored diamonds. Finally, we are also in the process of rolling out our price intelligence tool that has been in the works for several years. Obviously, it takes off of the 20 years of data that we have been accumulating. And the idea of the price intelligence tool is that it allows to demonstrate with a very high resolution the wholesale asking price of any particular stone. So different players in the market that have a need to reflect the actual wholesale asking price of a stone and do not necessarily have the decades of expertise that entails in order to come up with the price are able to use the FCRF price intelligence tool in order to determine its wholesale market value. Now, having said that, this tool will be placed in the hands of not every single player. We are not looking to disrupt the market with this tool. The only thing that we're looking to do is to empower and enable players that require that resolution of pricing to have it as a tool to continue to provide service to this domain, and along those lines allow the FCRF to continue and develop this domain worldwide. So those have been the tools, or the tools line of products that we put out. And then there's the service, or the services that we provide. And that includes a market analysis, something that we've been putting out for quite several years. Price valuations that are required by different players, whether by insurance companies, auction houses, and so on. And we have the ability to take a stone and produce a report that covers many aspects of the stone that indicate the value of it and provide some other attributes as well. And we also put out auction analyses and auction results. We provide coverage of actual auctions that take place by the three major auction houses when fancy colored goods are put up for sale. We cover them before the auction takes place, throughout the auction, and we also provide analysis after the auction took place with its results. That's the second line. And the third line is point of sale elements and utensils. We provide tools that allow retailers to have tools that would demonstrate and showcase fancy colored goods in a better way. These include posters, they include light trays, they include our books and other aspects that help at the point of sale. So those are our three lines of products and services.
Thank you. On the issue of that price intelligence tool, and this would apply also to the price index, how is it possible to determine an asking price for a stone that's so rare, so that for any individual specimen there can't be that many, or any individual category there can't be that many specimens on the market? How are you able to come up with an average when you're dealing with so few stones?
So it's actually not an average. It's a bespoke analysis of a specific stone in order to price that stone especially. Allow me to zoom out for a second and explain the way that the price index is being conducted, and that would allow me to also then zoom in to how the price intelligence tool does what it does. So the FCRF puts out the fancy color index every quarter. We have a jury of about 30 data suppliers. These are mid-market players with decades of experience with these goods. And they receive every quarter a questionnaire that has been tailor-fit around the goods that they deal with. That questionnaire seeks to receive from them not only pricing of the goods that they're being questioned on, but also it seeks to obtain from them aspects that lead into the process of pricing them. This includes market sentiment, prevalent pricing in the market, previous offerings, and previous bids that they've received. Also, different market nuances that find their way into influence the prices, and more importantly, show the direction in which those prices are moving. We analyze all that information, and all that information results in the producing of the quarterly index. Now, it's also important to mention that the building of the index has been done with top mathematical and statistical minds that have nothing to do with the diamond industry, obviously. And not only that, the methodology of producing the fancy color diamond index has been constructed and verified with Citrin Cooperman and Company in the US. And they have been also auditing and verifying the results of the fancy color index as a result of the methodology that has been put together for 10 years in the first 10 years of putting the index out.
Right, and that, just to clarify, that the index is also asking prices?
Correct. The index reflects wholesale asking prices. Now, moving on to your question about price intelligence. What we do with the price intelligence tool is, number one, taking the historical information that we have, that we accumulate and store as part of the fancy color index. And we take all that knowledge, but in addition to that, we're also taking the knowledge that comes through from our data suppliers every single quarter in order to make sure that the pricing that we provide through the price intelligence tool continues to be accurate and continues to reflect market sentiment and the development that happens in the market. When you're using the price intelligence tool, essentially you're providing a GIA certificate that allows us to obtain all the information from the GIA with respect to that stone. And there are also other attributes, other FCRF attributes, such as the IDU, the inner grade of the stone, the color dispersion of it, and the undertone, which again play a significant role in the valuation of the stone, in addition to the color category that the GIA determined and other traits that are provided by the GIA. With all that considered, we zoom in on a price range, it's always a range, for the particular stone at question, and we provide the price range for that particular stone. We've tested this tool for several years, and the results are quite amazing.
So how is the fancy colored diamond market right now?
First off, I think it's important to acknowledge that obviously the entire industry is going through a rough period. And if you take a look at the fundamentals around the diamond market and the economic fundamentals that obviously have an impact, it's quite understood why that is the case. If you look at prime rate in the US at 7.5%, that's still above average. If you look at major markets for diamonds, such as China, Russia, and other, even the US, obviously there are some issues that are impacting the sentiment in those markets and have an effect on the industry as a whole. Having said all that, if you look at the fancy color index that we put out, you still see a significant price resilience. And there's a good reason for that. Fancy color diamonds are at the top rarity bracket of the industry as a whole. Mining companies sell fancy color diamonds when they can. On the other end of that, retailers would buy fancy color diamonds from mid-market players when there's a demand for it. The mid-market players are actually serving as regulators between these two extremities. And they're doing this by only putting out goods to the market when the market has the conditions to acquire them. And typically, the mid-market players that are a source for polished fancy colored diamonds, they don't sell all the time. They sell when the time is right. And like I said, this serves as something that regulates the swings that you would see with other types of goods. And that lends to the price resilience that you see. There's another thing that needs to be taken into consideration. The consumers, or the people that buy fancy colored diamonds, are typically top luxury connoisseurs. They're typically collectors. They're typically people that buy these exceptional goods at particular points in time. The demand for it happens when it needs to happen, and therefore throughout the year there is less pressure for companies to put out the goods on one hand or to acquire them on the other, and that serves as another regulator in the market to even out the ups and downs that you would see in other types of goods.
Does that mean that it's difficult for a company to sustain its entire business on fancy colored diamonds, given how rare a sale is?
I wouldn't say that that's the case, because that is pretty much dependent upon the size of the player. Based on the size of the player, a different player could sustain a sale that happens every day, every month, every quarter, or every few years. However, when you're looking at retailers that sell predominantly colorless goods, when you're looking at jewelers, the sale of fancy colored diamond jewelry creations usually happen every once in a while. They don't happen with the same type of occurrence that you would see in other goods, and that again contributes to the resilience of the price.
So going back to what you said about the way that the middle players in the fancy color market regulate the industry to an extent, that sounds like a fundamental difference from the mainstream diamond market, where the large miners tend to regulate supply, and they regulate supply of rough by releasing or holding back supply of rough. Is that a fair distinction between those two categories?
So the number one difference between the two needs to be that mid-market players that handle fancy color diamonds, they will put out the goods that they have when the conditions are right. They don't operate as an extension of a site system, for instance, in which De Beers operate. They accumulate these exceptional goods when it is possible, and they sell them when market conditions are ripe, and when these conditions are right for them to sell those goods. And that serves as kind of a regulating factor that affects pricing in the market.
So one of the trends that we saw in the index that you published for 2024 was that's relative weakness in prices of yellow fancy colored diamonds, but more stability in pinks. What do you think drove that distinction? Why did yellow suffer so much?
So in two words, it's goods availability. The availability of yellow goods is greater when compared to the other color categories. And that obviously affects pricing, and it also affects to what degree they are rare. And all of these funnel into how it is being reflected upon the wholesale ask price of these particular goods. So yellow fancy color diamonds are more available in the market, and therefore when there is a slowdown in demand, that availability translates into lower ask price. When you look at pink fancy color diamonds and definitely blue ones, these are more rare, and therefore they show greater resilience even in downturn market situations.
Right, and that downturn, I would guess that the bigger driver there is just a slowdown in Chinese demand. Is that right?
So the slowdown in the Chinese economic scenario has definitely played a role. There was also a role of G7 sanctions that took place on Russia originating goods. That obviously played another role. However, if you take a look at the fancy color diamond index that we put out, and you take a look at what has happened to prices, you see that there wasn't a huge change. So there was somewhat of a change, but still prices managed to hold up. And again, that is a reflection of the price resilience that we see in this asset class.
Well, you mentioned the sanctions on Russia. How exactly has that affected the fancies market?
So if you take a look at the fancy color goods that come out of Russia, it is obviously a part because Russia is a major producer in the market. However, not all of the color categories come from Russia. So it had an effect mostly on the yellow color category, but still you saw resilience because some of the other aspects that we've talked about earlier in terms of what maintains price resilience in this market segment.
So you're saying that the sanctions on Russian diamonds meant that any yellows that came onto the market were not sellable in markets that had these sanctions, such as the US.
Correct.
And that's why the price went down.
That is one of the factors that had a downward pressure on segments of the fancy color diamond segment, yellow being one of them.
Right. And I know a fair number of yellow diamonds come from Canada, like the Gaucho Clay Mine and the Catty Mine. Is there any concern that Donald Trump's tariffs on Canada might have an impact on the fancy color market?
So to be honest with you, I heard no chatter with that respect. So there's nothing that I'm seeing that that indicates that at this point.
And what is your outlook for the market? Do you see a recovery in this particular sector?
If we're looking at the top luxury market as a whole, fancy color goods being one of it, all in all, you are looking at a market that continues to grow, and there are some aspects that lead to that. Obviously, the opening up of China played a huge role on that. However, social media also played quite a significant role on consumer behavior and the popularity of top luxury goods. Looking into the future, I think that we still see room for growth for this top luxury market segment. I think that economic factors, there are ups, there are downs. It's a cyclical situation that we're going to see different realities affect consumer behavior. But all in all, I think that if you look at the future of this segment, it's bound to continue to grow. And we are bound to continue the FCRF's push in being a significant conduit with supporting that growth.
You also foresee more traceability for fancy colored diamonds.
So traceability is a very big part of what we do, and more specifically in the diamond diary that we put out for fancy colored goods. The reason for that, well, there are a number of reasons for that, some of which are sustainability, some environmental impact. But at the end of the day, it is the gravitational pull of consumer behavior and consumers' wish to understand where their goods are coming from and to understand the story that is behind those goods. We reflect all that in the Diamond Diary in order to, number one, demonstrate that at the retail end, but number two, also provide a more holistic way of presenting these exceptional goods to the potential buyer and enhance the overall value of it.
Right. Just before we get to our last question or two, we can't talk about colored diamonds without mentioning Argyle and the fact that it's not producing anymore. How has the closure of Argyle, the Argyle mine in Australia, impacted the market for pink and red diamonds?
So pink and red diamonds have always been a very coveted category. I think that the closure of the Argyle mine, other than making these goods even more coveted, they indicate to the entire fancy color diamond segment the fact of how rare this segment is. There are talks of mining in general stopping for any types of diamonds in 50 years from now. I don't know what's going to happen in 50 years from now. However, it's pretty safe to assume that the fancy colored goods are going to become more and more rare as a result of Argyle closing and other sources for fancy colored goods dwindling away and coming offline. And therefore, with respect to the rarity of fancy colored goods and the underlying value of them, they actually support the price resilience and even, I dare to say, make them of a higher price point. And therefore, this is something that is going to continue and provide elevation and embellish upon the value of fancy colored goods.
Right. Just finally, we're recording this in Israel, where both of us are based. Traditionally, the Israeli market has had quite a few companies that focus on fancy colored diamonds, and that reflects the fact that the Israeli industry is skews towards the higher end goods. But we know that the sector here in Israel is not what it used to be. Is there still a strong fancy colored diamond market or industry in Israel?
If you take a look at some of the mid-market players that handle fancy colored goods, some of the leading players in that segment are based here in Israel. And therefore, there is still a strong presence in Israel for fancy colored goods. When it comes to the retail side of it, I don't know what to tell you. I'm not sure that given some macroeconomic factors and other aspects that Israel has been going through in recent times, I'm not sure to what degree that plays a role. But when it comes to supply, when it comes to master craftsmanship, when it comes to dealers that buy fancy color rough and produce them into finished and polished fancy color diamonds, there are still significant players here, and that plays a role.
Right. Well, on that note, Roy, I'd like to thank you for joining us on the podcast. We've had an interesting discussion about the FCRF annual price index and the fancy color market in general. I've learned a lot, and I'm grateful that you joined us.
Thank you for having me, Joshua.